There is a discussion and a long-standing debate around whether investing in a socially responsible or sustainable way makes you give up returns. And everyone who's in this industry lives and breathes that question and that topic and everything that comes with it. The good thing now is we have a lot of evidence and data that proves that, in fact, companies that take their environmental, social, and governance risk into account, and investors who take environmental, social, and governance risks and opportunities into account not only don't have to give up returns, but in fact is a potential source of additional returns. In fact, that this could be a way to add, as we call alpha, into your investments that you wouldn't have otherwise gotten if you didn't take these issues into account. A few years ago, there was a meta study conducted by a group of economists who looked at 2,200 underlying studies around the relationship between corporate financial performance and sustainability writ large. So this topic has actually been discussed and debated by academics for a long time. And the results of this meta study show that a large majority of data points show a positive relationship between sustainability and corporate financial performance. And in fact, it's very rarely the case that there is a negative or inverse relationship between these two. And that proves, and I think for many of us in this industry, proves that at a meta level, corporate financial performance is improved by a better adherence to environmental, social, and governance best practices. And the real reason behind this is that sustainability actually has financial implications. If you take out the politics and if you remove all the drama around it, the idea of consciously being efficient in your use of environmental resources and natural resources, of paying your staff well, of having a diverse board, having a diverse set of employees, all of these things actually lead to better outcomes as opposed to worse outcomes for investors, because it leads to better outcomes for corporations and for governments themselves too. So this idea that ESG or sustainable investing will lead to an underperformance, I would say now should be considered an outdated concept, because if you have a broad enough understanding of what this topic actually is, it gives you additional insights into investing in securities that are taking these issues into account and therefore lead to better investment returns.